I'm Jack Slocum with Option Alpha, and today we're going to play a little game. I'm going to flip this coin here, and every time I flip it, if it lands on heads, I'm going to pay you $150. And if it lands on tails, you only owe me $100. You ready? Well, let me tell you a secret about this coin, is it's actually rigged, and it's rigged in your favor. Every time I flip it, there's a 55% chance that it's going to land on heads, and only a 45% chance that it's going to land on tails. That means that you have a 55% chance of making $150 and only a 45% chance of losing $100. Now some of you might be thinking, I have bad luck, it's definitely going to land on the 45%. Well, what if you could do it as many times as you wanted over a period of time until those odds actually averaged out and your chances of winning became significantly higher? Would you want to play then? I definitely want to play this game. I'm just going to tell you, I'm a person who loves to play these kind of games, and that's why I originally created the Option Alpha platform and why we are promoting a new approach to trading options, Options Trading 2.0. That's based very similar to the game that I just described to you. So let me jump in. We're going to start off really simply, and I'll show you exactly how to do it using the platform. So let's go ahead and get started. As you see here, I have a completely empty, fresh Option Alpha account, just like you'll be starting with. And let me give you a little overview about what we're going to be going over in this series. For one, I'm going to be starting with $10,000 of my own money in my own personal Tradier account. All the trades I make in this series are my own trades. They are not affiliated with anyone, and they are not trading advice in any way. I am not an influencer. This is not another YouTube video where I'm going to try to teach you how to turn $2,000 into $100,000 in a week. We're going to learn to be patient traders who look for opportunities where the odds are in our favor, which is a key part of Options Trading 2.0. So how is Options Trading 2.0 different than normal options trading? Well, for one, instead of using values that are picked by some person somewhere who says you should trade this many days till expiration, you should trade this delta value, you should exit positions at this point, what we're going to do instead is we're going to leverage high-speed computers that are available today and use math and probabilities and expected value to find the best available trades on the market today. And then we're going to use automation to completely transform the options trading experience, tackling that pesky bid-ask spread. So anyone who's traded options knows as you try to get in between that bid-ask spread, you place an order, you cancel and replace it, you cancel and replace it over and over, trying to get the best possible fill price. And with Option Alpha, we have smart pricing technology which tackles that process for us and gives us the opportunity to get the best possible fill price automatically. We're also going to use bots to monitor our positions. They'll take profits or stop losses at any point. There's a whole configurable set of settings, and I'll cover those in just a little bit. And in future videos, we'll cover using scanner automations, which have the ability to monitor the market and wait for opportunities that match whatever your criteria are, and then automatically open those positions for you. And then the last part is, and this one is the most exciting for me and for everyone who uses the platform, is the ability to take a systematic options trading strategy and turn it into an automated machine that runs all day and hopefully makes money for us. So we'll go through that whole process over the course of this series, and I hope you enjoy it. So let's jump in. The very first thing I'm going to do here is link my Tradier account. I'm going to go to Trading Accounts. I'm going to link my Tradier account. So once you get here, you just have to approve access. And then boom, my Tradier account is now linked. So I can come into bots over here, and I can create a new bot. And you might be wondering, why am I creating a bot if I'm just going to place a trade today? And this goes back to what we were talking about in the first step, where bots do much more than just open a position. So they tackle that bid-ask spread for us, and then once our position is open, the bot will sit there and monitor it all day long. Whether we're busy doing work or whatever it is we're doing during the day, the bot will look for our whatever opportunities we tell it to for when we want to exit our positions. Let me create one. I usually have a bot called Manual Trading. And since I started with $10,000, I will start this guy with $2,500. This allocation value, this just stops the bot, and in this case, since it's a manual bot, it will let me know if ever I'm picking to open new positions that will exceed the amount that I have allocated for this particular strategy. So in this case, in my manual trading, I'm allocating $2,500 of that $10,000 for my manual trades to start. So my bot has been created. All right, so this screen here, the settings screen, we'll go over this in a future video when we set up automated trading, but we have the ability to add automations and make this bot do a lot of exciting stuff. But in today's video, we're going to keep it simple. We're going to come over here to Trade Ideas. This banner has great information. If you click on these, it'll tell you all about how Trade Ideas works. But I'm going to give you a quick overview right here. The first thing that it does, so imagine this back-end technology here. You see all these different opportunities. What it's doing is it's going through the top performing position setups that are used by all traders in the platform. So it looks over the last 90 days, what are people having success with? And then it looks up the current market data for the position setups that people are having success with, and it presents them in that list for that we can just pick from in this shopping-like experience. The other thing that it does is it goes through every option series in the next 45 days that expires on a Friday, and it combines every possible leg combination looking for which positions have the best expected value, the best reward risk ratio, or the highest premiums that we can trade. And then the last thing that it does is it looks at all of the positions that are currently open in the platform and looks to see if any of those have a positive expected value and adds those into this interface that you're looking at right here. This process is running continuously all day long. If you look up here, so far today it's analyzed 48 million different trades that it could be made. So let's jump in. So if you remember in the original discussion, we were talking about having a 55% chance of winning that coin flip, basically a coin rigged in our favor. So if we come in here to this value, probability of max profit, what that is that's the probability that this position is going to win whatever the maximum profit value is for the position. And we're going to set that to 55% or higher. So now we have a coin that's basically rigged 55% in our favor. The second thing that we had in that original analogy of the coin flip was we risked $100 in order to win $150. So if we set our reward risk here to 150 or greater, we will actually see option positions that are available in the market right now that have a probability of max profit of 55% and 150% max profit. It's very similar to the game we were just discussing, and right now it looks like we have about 10 of them available. Let's look at one of these. AMAT Iron Condor expires in 3 days. 56% chance of max profit, 160% reward risk ratio. Let's take a look at some of these other ones. We have Wells Fargo here. Also an Iron Condor, 58% chance, so it's actually a little bit better than 55%, but the reward risk ratio has slipped some. Let's see what else. This XOP, 17 days, so a little bit more time, 56% chance of max profit, and 163 reward risk ratio. The EV, the expected value, which is actually going to calculate in all the different prices that could also occur in between the max profit and the max loss. When I personally look at these, I am going after the max profit, and anything other than max profit is extra, so I'm looking for positions where the odds are in my favor to get the max profit, or I have a reward risk ratio that justifies not having those odds in my favor. And in this case, I actually have both. So I think this is going to be the position I'm going to go ahead and pick to trade. And I'm going to trade on each one of my trades during this series. I'm going to look to trade This bid-ask spread is a little bit wide, but so imagine this mid price here is 62 cents. I'm going to try to get filled at a worse price of 60 cents. And as you see, it lands me right on that 150% reward risk ratio if we get filled. My max profit is $780 and I'm risking $520 to win that. I'm actually going to tick that down one. I want to keep my positions 5% of the $10,000 or lower. So that would be $500. So I'm going to pick the bot we just created over here. I think everything is good. So if you look here, the bid-ask spread is pretty wide. And so when it goes to place a trade, we might have to actually take a worse price. We'll see. Might go down to 59. So you see here, we're now only going to get $143 for every $100 that we risk. But again, we have a slightly better than 55% chance. And it could fill at a better price than that anyway. So let's go ahead and place this trade because while I was talking, the price actually became worse. So if you look here, it's trying two prices. This is the smart pricing technology that I was telling you about earlier in the video. Basically, it looks at the bid-ask spread and it calculates prices and then it tries orders. So it's going to try this one here for 10 seconds. And if it doesn't fill, it's going to try this price for 10 seconds. And boom, we just got filled at 59 cents. So let's look at how this math actually works out. We have a $708 max profit and a 56% chance of getting that max profit. And we have a $492 max loss and only a 32% chance of getting that. I like this math. This is exactly what I'm looking for when I trade the market. It's somewhere near a coin flip, but a little bit better. But the risk to reward ratio makes it worth taking that chance because I have $708 that I can make and I'm only going to lose $492. So I only have to win so many of these in order to actually work out to be a profitable trader. Let's take a look at these exit options. Now, they look pretty complex, but they're not as complex as they look. These are instructions that you give to the bot that tell the bot when to exit this position if certain market conditions occur. Like, for example, it's doing well and it's profitable, or if you want to stop losses. Me personally, I never use stop losses. We have research that suggests that stop losses actually cause you to lose money long term, that we're getting into this position with the probabilities that we talked about in the very beginning. And we want to let those probabilities play out. If the position at some point during its lifetime moves against us and starts to lose money, we don't want to then quit and bail and get out of the position. We have to let it actually play out over the course of time because that's what the whole probabilities are about. Now, if the position becomes profitable quickly, or if the position becomes profitable at any point up to a certain degree to where the reward risk ratio is no longer favorable, then we probably want to exit that position. For me personally on this position, because it has such a big credit, I'm going to go ahead and try to exit the position at 40% of the original credit. And I'm also going to set this smart pricing up to be quick about doing that. And for me personally, if these positions flip-flop and out of nowhere I have the opportunity to take down 40% of that credit, well, considering the opening credit was $708, so that would be somewhere around $280. At that point, my maximum win for the position would be somewhere around $400 and something, and my maximum loss for the position would then have ballooned up to $700. So at that point, I'm risking $700 to win $400, and I want to get out of that position as soon as the math starts to look like that. So I'm going to wait at least one day to avoid pattern day trading. So that's it for this video. In a future video, we're going to be setting up auto trading using this auto trade button over here and trading trade ideas automatically. We'll also cover setting up some other bots, including a mean reversion bot that uses tilt. We'll cover some ticker liquidity. So the symbols that you choose to trade have a huge impact on your trading results. We just traded in XOP. This is actually one of the better tickers. You can see here option liquidity is 4. It ranks number 39 of all tickers. These stats are pretty great. It tells you the average bid-ask spread, at what percent on average live trades fill, how much each contract the market makers are scalping from us. So here it's $2.90. There's lots of other stuff we're going to be covering in these videos. If you got anything from this video, don't forget to like it. If you have any questions, please ask them in the comments. I'd love to hear from you. On behalf of the whole Option Alpha team, we love you. Thank you for watching, and God bless.